Michael Sneyd, currency strategist at BNP Paribas. He joins us. Michael, thank you so much. Welcome to On the Move. I wanted first of all to talk about China, because this was a huge surprise in terms of timing. Yesterday, for the first time since 2008, China deciding to cut interest rates. Does that make you optimistic that they're in control of the situation, or does that make you worried because of the timing? It's before the data, and it's quite unusual to have such a big move also before the change of leadership in September.
Yes, well, we've seen in currency markets very generally this week, we've had risk on due to various positive factors. And the China rate cut really just added to that positive sentiment that we had from Spain recognizing that it needs external support, Germany giving some positive comments, and also expectations of Bernanke giving something in his statement yesterday. So the PBOC's decision really added to the sentiment, but we've seen today that some of this risk appetite is being taken off the table. There's concern that the PBOC were preempting the negative data, or the data that we're getting out over the weekend, that it could be negative. Exactly.
Yeah. And so, Michael, how concerned are you that actually we could be potentially facing a hard landing for China? I mean, I guess this, we talk about the European crisis, we talk about US growth, but actually, if China goes through a hard landing, will it take everyone else with it?
Well, the PBOC still have plenty of scope to act. Okay. So our economists in China expect that they will implement another policy cut, and they will also implement at least 2 RRR cuts. So in currencies, this is supportive of things like the Aussie dollar. Yeah. And particularly one thing that I think is very important in currency markets at the moment is positioning. And we see that investors have already positioned themselves very short Aussie dollar compared to how they've been positioned in the past. So this means there's already a lot of bad news priced in. And so actually the risk is that the positive news surprises to the upside.
So, Michael, in terms of Aussie dollar, you can see there 0.9860. Is it going to be stuck in that range? Are we going to see any movements in the next couple of months?
I think it's going to be very dependent on, in the short term, on the data out of China. Also, the outcome of the Greek election next week. These are 2 key risk events that we're paying a lot of attention to. And then, in terms of the next couple of months, I think there's going to be a lot of focus on the Fed and whether or not we get further stimulus, and whether or not this drives risk appetite in both equity markets and currency markets.
How disappointed were you by what Ben Bernanke was saying yesterday, not really giving a clear vision about what he's ready to do, when he's ready to act, or what form extra stimulus could take? Well,
I think one critical thing to keep in mind was when Bernanke was speaking yesterday, he was talking to politicians. And this is not the kind of backdrop of which he would aggressively
give
state.
Hints.
Exactly. Yeah. So we weren't particularly surprised. And in fact, because of the comments we've had from Fed speakers earlier in the week, we've had both Evans and Yellen giving fairly dovish comments. Our economists actually think that it's more likely than not that the Fed extends Operation Twist when it meets on the 20th of June. So it does actually ease policy.
And Michael, how relevant is it actually, the next Fed meeting is over 2 days? Mm-hmm. Does that mean that they are very uncertain about the economic? I mean, this is something that we'll see more and more, these 2-day Fed meetings. But certainly, should we be a little bit uneasy that it's going to be a more difficult chat?
Well, I think what it highlights is that it's going to be a very intense discussion when the FOMC next meets. And they are going to be looking at all the different options. And that actually going into the meeting, it is very finely balanced on the outcome. So I think it adds uncertainty to an already uncertain market, and also means that investors, particularly in currencies, are going to be a little bit cautious about putting on the risk-on positions ahead of such events.
Michael, let's have a look at euro-dollar. Of course, today we had trade data from France, from Germany. That crucial, we find out on Monday, or we hope to find out how much Spanish banks need in terms of money to recapitalize themselves. What do you do with euro-dollar?
Well, I think euro-dollar, we've seen, again, because of the positioning in euro, having been very aggressively short up until the beginning of this week, we've seen short covering this week. This provides us with scope for euro-dollar turning lower if we get negative events.
How low?
From Spain and from Greece, I think will be critical. Yeah. So I think we could move back and test the lows that we've seen, so around 123. Even on a perhaps positive Greek outcome, so the new democracy being elected, because we're still going to see some uncertainty as they're going to be approaching the Troika to look for renegotiation of their terms.
And how worried are you about Spanish banks? I mean, we don't know. We've heard figures in terms of estimates about how much they need, 100 billion euros. Does this look like a good figure to you? Are we going to see more?
Yeah, we've been pointing at that kind of figure for actually quite some time now. So we are actually much more comfortable this week, having seen the Spanish politicians accept that they will need external support
for the banks.
For the banks. And also some tones from from Germany, suggesting that they might be willing under certain conditions. So we've been looking at a 100 billion plus number for a couple of months, and we're much more comfortable now that Spain is willing. Yes, precisely.
Michael, let's see what the pound is doing. Now, of course, the Bank of England yesterday not giving any hints to extra stimulus, leaving that interest rate unchanged. I guess we have to see the MPC minutes to see exactly how many votes were to leave the status quo.
Yes, precisely. But aside from the MPC, we see that sterling has been very aggressively sold recently. And we think it's been oversold. When we look at short-term fair value models, such as BNP Paribas SA, sterling looks cheap. So we like buying sterling at the moment.
So it's 154.44. What would be fair value for this currency?
For fair value for cable is about 158. For euro dollar, it's about 80 pence. But we think that going forward, if the ECB cuts rates, and also given that sterling should continue to benefit from reserve diversification into sterling, we think we could see euro sterling in particular reach 78 over the next couple of months.
All right, interesting. Thank you so much, Michael Sneyd there. Michael Sneyd, currency strategist at BNP Paribas.